Hello everyone, welcome to all of you in today's webinar, which is conducted by Bursa Investors. The topic of today's webinar is Bear Market Survival Guide. How I make money in any market. Now, let's come to the topics which would be covering in today's webinar is first, introduction of bull and bear market. Second, trading strategies for bear market. Third, market bottom. And the fourth one is which stocks to buy in bear market. So let's start. A bull market lifts all boats. If you make trading mistakes, the gradually rising tide will usually bail out you. Not so in a bear market. When the tide rush out, you can spot the new buy traders and fraudsters on the sand. I don't want this happen to you. I want you to be prepared for the next bear market. I have lived through the great bear market in 2008-9 in which one I made some mistakes, but ultimately emerged where wise health. By the time zone, most investors realized a bear market has taken hold of stocks. Much of the damages has been done. Often, still bear market begin while a bull market is still on its last leg. Mark D. Cook in our book Prepare Now and Survive the Coming Bear Market includes 11 stages that tell you the bear market is approaching. Yet every bear market is different, so consider as a guideline. So everyone should know about bear and bull market. Now let's come to the chart. And enough time, a bear market look like this. In a bear market, a stock market index spend most of the time below the 50-day moving averages. The lower blue line in the image is a 50-day moving average, and the 50-day moving average is trading below the 200-day moving average, the upper red line in an image. The chart began on the upper left hand side of the page and finish in the lower right hand side of the page. That is a bear market from upper to low side. Bull market look like this. In a bull market, a stock market index, a collection of a stock like S&P 500, spend most of the time above the 50-day moving averages, the top blue line in the image, and the 50-day moving average is always above the 200 moving averages, the lower red line in the image. The chart began on the lower left hand side of the page and finished at the top right hand side of the page. That is a bull market. Bull market are always a leisurely affair. They take their time to develop and usually last for 5 to 15 years. But market lasts until everyone in comfortable bull market. Make sure that almost everyone is full invested and even using a lot of margin borrowed money by brokers. Bull market lasts long enough to make sure that all the amateur feel like stock market genius. Some important candlestick pattern which is indicated bearish movement in the market. There is a different type of candles like single, double or triple. There are different patterns like hanging man, shooting star, gravestone, bearish, spinning top. In double candle pattern is bearish kicker, bearish engulfing, bearish harami, dark clouds and tweezer top. Tweezer top is the most important candlestick pattern, just like a shooting star or a hanging man. In a three candle pattern, evening doji star and evening star is the most popular. The three black draw is also good, but evening doji star or a evening star is a most popular. Mostly, an investor focus on this type of pattern. Same is some important candlestick pattern which is indicated bullish market direction. Bullish direction also including single, double and triple candlestick pattern. In a single like hammer, inverted hammer, dragonfly doji, bullish spinning top. In double candlestick pattern, bullish kicker, bullish engulfing, bullish harami, tweezer bottom. And in three candle pattern is a morning star, three white soldiers, three line strikes. These are a bullish candlestick pattern. Mostly investors are focused on dragonfly doji, hammer, bullish engulfing and morning star pattern. They are a most accurate candlestick pattern. So that this type of candlestick patterns is the most important to knowing bearish or bullish market. They are working with some guidelines and investors are following them. That is the only reason the investors are making a lot of money. If you're trying to rule break of the candlestick patterns, probably you lose your money. So you should be work with them. Now here is a best example for the bear market. This slides come from 2008. The chart was break channel pattern from candlestick. It was go down and down and down and make a lifetime low. The chart was create a evening star pattern on the top of the chart Look at here. Then the market make a low from the last swing area. Then it will be make a recovery slowly. In that case, we should be work with the strategies. Strategies for bear market. We should be follow some strategies for the bear market. It will work in any type of bear market. How to trade in bear market? Look, with us you can trade in bear market speculating on price movements using CDFs. Short sellings enable traders to speculate on the falling share price, and if the prediction is correct, make a profit. It's important to note that even in a bear market, the price action could go their way. So if the same share price happens to rise, a loss will be incurred. So that we have 5 trading strategies. Bear market strategies can guide you in negative navigate through trading when negative performance coupled with high investor uncertainty. Here are some popular strategies to keep in mind. Take a short selling position in options. As they say, go, the trend is your friend. Short selling is a way in which you can follow the directional move in a bear market. You then don't take a selling position, go short by speculation on falling market price. If your prediction pan out, you will make a profit, but even in bear market, price can move either way. So you will incur a loss if the price action move against your position. The second strategy is find a good entry point. When the declining in price hits the 20% mark, its official bear market territory has been entered. If looking to good short selling, for example, the cloud be a good points to open the position, even though the price is likely to continue dropping. It's impossible to know for how long it will keep falling or whether it will continue to drop at all. If it does continue, there's also no way to knowing how long the declining will last. The third one is take a profit at regular interval. Don't wait for the big profit or a big points of entries. The probably price action directional in a bear market is discrediting. The cloud be an opportunity to lock in profit regularly. But it's important to remember that price can be move up every now and when, even in bear market. Fourth one is a trade and indices and ETFs. While indices such as the FTSE 100 represents a basket of stocks by company market capitalization, exchanges, trades fund, ETF track the performance of a market. For an example, country stocks an index or a sector, with bear market often being triggered by supplies and demand factors, and in turn impact economic conditions. Such a broad exposure to related assets offers an opportunities to benefit from the expected similarization in the price movements. Naturally, if the price actual movement go against the gain of expectation, this would spend losses. The fifth one strategy is set a proper stop loss order in every trade. A stop loss order is an introduction that enables you to exit a position automatically once a certain less favorable price is reached. Therefore, if you are short selling, your stop loss order would be at a price that is higher than the one you open your position, and vice versa if you are going long. The risk management strategy helps you cut loss if the market moves against your trade. So use proper stop loss in every trade. So these are 5 most important strategies which is helping in bear market trend. If you want to know market bottom is almost over here or it's continued to fall, you should know all 3 factors. First, sector characteristic, price and volume action, and the third one is bottom lining. First, sector characteristic. The stocks you own in your portfolio belong to sectors. Sectors are simply group of public companies and stocks in a related industries like oil and gas, technology, financial, retail, foods, and some other sectors that may be familiar to investors. Typically, stocks following in lockstep to both the overall stocks market in their respective sectors. Identify which sectors your stock belong to is a good first step in determining in your stocks and near the bottom or a point of less instance decline. Investors who looked to find value in certain financial stocks were crushed as the entire financial sector experienced a historical decline. The lesson learned is identify and understanding what sector you stocks belong, compare its performance against the entire market. Price actions and volumes. is the most important thing, which is changing the stock's direction. In case the price shifting in upward and upward and upward, means the price providing a continuous high from the last high. It means the price action changing direction, as well as the volumes adding continuously. It will decide a market move. Volume added credibility to stock price and price directional. To an extent, remember, stock trade on supply and demand, just like all order good in a free market. There are just a lot more things that influence stock price. Water gallon or a milk. The higher the relative volumes, once the stock has finished going down, the more likely the stock will not see lower price any more time. The bottom line. Ideally, investors want to know when price trends are about to make a major changes in either direction. They are reaching top or bottom. The bottom line is no one truly know with certainty. Keep in mind that there are just price in the puzzle of investing, but if you can add their skill set to your investment knowledge, you will likely be a more successful investor. Now, this is a wonderful example of a bottom line. The price was make a bottom line from the supportive area and continues. It was trying to break the supportive line, but it was make a channel breakout from upward direction, and it was make a new market high. Stocks to buy in bear market. Essentials you need to know about every stock to buy. Take your money and dropping in different investment vehicles. May seem easy, but if you want to be a successful investor, it can be really so. Many retail investors thus who are not investment professionals lose money every year. There could be a variety of reasons why, but there is one that every investor with a care outside the investment market understand. They don't have time to reach a large number of stocks, and they don't have a research team to help with the moment task. So the moral, if you don't do enough research, you will end up risking and losses. That's the bad news. The good news is you can cut down the losses as well as the moment of research. You need to buy looking at some key factors in investment. Learn more about the 5 essentials of investment below. First, What stocks to buy? First thing, you should avoid unusual volume stock. Only work with high beta like uh, like directional stocks as well as indices. They are very potential stocks and your investment are safe with them. Second, price earning ratio. Imagine for a moment you were in the market for somebody who could help you with your investment. Your interview to financial advisor. One has a long historical of a market people with a lot of money. Your friend have seen a big return from this financial advisor and you can't find any reason why you shouldn't trust them with your investment dollars. They tell you that for every dollar they make for you, they are going to keep 40 cents, leaving you with 60 cents. Third one, beta. Beta seems like something difficult to understanding, but isn't not. It measures volatility or how moody your company's stock acted over the last 5 years. It measures the systematic risk involved with the company's stock compared to the entire market. You can find the usually beta value on the same page as the PE ratio when reviewing stock research by such as at Yahoo and Google. Fourth, dividend. If you don't have a time to watch market every day and you want your stocks to make money without that kind of attention, look for dividends. Dividends are like interest in a saving account. You can get regardless of the stock price. Dividends are distribution made by a company to its stockholders, shareholders, review from its profit. The amount of the dividend are decided by the board directors and are generally issued in case through. It's uncommon for some companies to issue dividends in the form of stock shares. But before you can go out the purchasing stocks, shares, look out the company's dividend rate. If you simply want to park money in the market, investment in stocks with a high dividends. Paraphrase Leo says, all bull markets are happy in the same way. Every bear market is unhappy to its own way. Thanks everyone.